Now, how will the stock market react to the central bank's rate decision? Michelle Ong joins us live from the PSC in BGC for more on this. Hi, Mimi.
Hi, Mikey. Well, Philippine shares jumping off from 69.52. The index was up by about 0.5% yesterday, despite net foreign selling, which actually went down to just 21 million pesos. But this upward movement yesterday was ahead of that policy decision announcement by the Bangko Sentral ng Pilipinas. The number to beat to be able to post a weekly gain is 69.68. Pretty far off from where we are right now. Joining us now on the line to give us his take on the markets, Jomar Lacson, Head of Research of ATR Asset Management. Good morning, Jomar. Thanks for joining us.
Hi, good morning, guys.
Hi, good morning. Jomar, very quickly, a quick reaction to the Bangko Central's decision. They did raise rates for a fifth time this year, total of 175 basis points already. Do you think the BSP is done for the year? Because there is one more policy meeting left.
Yeah, actually, the comments we had prior to the meeting were that the expectations of a rate hike yesterday was like 50-50, wherein the expectations are there's still one more rate hike for the year, but whether that's going to be in November or December, that's really where the discussion was. But offhand, I think the market was kind of, at least on the fixed income side, I think it was a bit indifferent when the central bank would actually hike the rates, as long as there's one rate hike that's going to be within expectations.
Mm-hmm. But do you think that with these rate hikes we've seen so far, when are those rate hikes going to start taking a bite out of earnings, out of GDP, out of the economic growth that we're seeing?
Well, that's the thing. It's the dynamics of the market is going to be a bit different going into 2019, because you're already seeing that the central bank has tapered its expectations over inflation. So, if you do that, I mean, if that's the expectation over inflation, then should we expect more rate hikes coming into 2019? From our end, we still have the view of that there's going to still be 2 rate hikes for 2019. So that's kind of a bit that may change, considering that the question that we have is that right now we're seeing long-term interest rates over 7, maybe even 8%, between 7 to 10 year. So the question there is whether that will be sustainable going into 2019. Should we see a downward shift of the yield curve, given that inflation expectation seems to be a bit calming down? And if that's the case, then this might be a good catalyst for the market to sort of re-rate. But having said that, even at the current levels that we have, it doesn't reflect risk-free rates that are at these levels. I think we're still factoring in risk-free rates of around 6%.
Hi, Jomar. I have a quick question. Okay, you mentioned 2019 and the catalysts for that. We've seen big policy decisions from the government. Malacanang suspending the tax hike on oil and the Senate approving the rice tarification bill. That being said, how are things shaping up for 2019, it also being an election year?
Well, that's exactly the issue there. I think that the 2 policy moves will help calm down, or at least concerns over inflation to 2019. Although expectations are it will decelerate relative to this year. But then again, we do have to factor in that you have a election year in 2019, so that should sort of lift demand up, and that's, I think, one of the things to guard against. But also, at the end of the day, where is GDP growth headed? No, it's not just, even if you remove the election boost that we are expecting. If you look at the infra spending, these are still the major factors that are driving the GDP growth, and I think those are the critical factors that the central bank is still watching over as far as inflation is concerned. So that still matters a bit more, but the policy changes do support a more moderated view over inflation in 2019.
Jomar, I just wanted to take two more questions regarding the rate hike that the BSP announced yesterday. Number one would be, how will the rate hikes, the rates that we have now, affect the appetite of investors for, say, bonds or other assets like bonds, fixed income, versus those who are invested in equities?
Well, if the question is bonds versus equities, I think there's I can speak more about the equity side as opposed to the yield curve, because the yield curve is kind of changing its shape as well. So the strategy there might be different. But for the equity side, I think that the investors, at least the foreign investors, have largely ignored the corporate earnings that just was completed yesterday as well. And although the way we see it, it's an improvement coming from the second quarter on an aggregated level. What it does tell us that the liquidity is actually far more important. That's why interest rates and inflation are actually big factors in 2018. So whether that they will still be big factors in 2019, I guess we'll have to reassess that given these changes. Yeah. So that's kind of like our view on how it will affect equity prices. It has been priced in, or has been being priced in.
And for the peso, we did see the peso open stronger today, 52.65 against the US dollar from yesterday's close of 52.805. Are you giving credit to the BSP rate hike for the strengthening of the currency?
Well, I think I think that's one of the signals that the central bank is also saying, with the rate hike. Because if you notice that we from the low that we had earlier this year, it had strengthened, and then it had made another. It became weaker last week, going back to 53. So I think the central bank's hawkish stance is also contributing to that. That we're going to keep the peso where it is right now. They think that it is I guess it signals that this is where they believe the fair value should be for the peso, given the balance of trade. And of course, the capital flows that we're experiencing.
Okay, on that note, thank you very much, Jonas, for joining us in the first part of our interview. We'll talk to you again at the opening bell. Mikey?
Okay, thank you for that, guys.